some extent, reading articles in the paper, and the county, at least the article says that the county was expecting a slowdown in property tax, which really surprised me. I wondered, that's question number one, whether you had gotten any feedback around that, or you were kind of thinking along those same lines, or whether it's just erroneous information in the paper.
For this current fiscal year, we will be on target. I think we'll have a healthy property tax receipts from what I'm seeing. And for next fiscal year and looking forward, the next fiscal year seems to be consistent and but further out, there is a slowdown. Not that there's not going to be, the rate of growth is going to slow down. So we may not be seeing the 5-6% growth that we see here at the library. We might see something slower, but again, these are projections that we see now, given sales tax. I mean, not sales tax, property values and property sales. But that's something that we can continue to review, and I am constantly working with the county on those figures.
I was really surprised to read that. It didn't quite click with me, but the other thing is that they have a lot of surplus funds from their vacancies and their difficulty in hiring. I mean, a significant amount, and we don't seem to have that proportion. And we do have some savings by the vacancies and stuff, but we don't have that.
That could be because of the different methodology. I don't know what their methodology is, but from my past experience, many agencies will fund at the top step. And so if they're funding at the top step and they hire somewhere lower than that, of course, you're going to see a greater salaries. In some cases, it is difficult sometimes to hire in public safety or, certain aspects. I've always, in the last couple of years, have seen a challenge in finance positions. So it depends on the organization. Here at the library, we don't need all the time budget at the high level. So we're more true to our expenditures when it comes to filled positions, and we're constantly hiring. And you can speak a little bit more about that.
And I would say our vacancy rate is actually very, very low in comparison to other libraries in the state. We have a great deal of flexibility in our hiring because we're not civil service and we aren't tied to civil service hiring practices. So the fact that we can negotiate starting salaries is something that a lot of agencies can't do, and we can hire more quickly. So we're actually very, very fortunate that we have the flexibility at being a JPA.
That's exactly what I wanted to know. Thank you so much, both of you.
Any other questions?
I have a couple of I apologize, really picayune questions that don't in any way impact the big picture message that you're presenting, which I think is very accurate. But and these are all on the revenue side. I'm having a little trouble reconciling the numbers that are on the report with the numbers that are actually on the financial statement. So for instance, under property tax general fund, the number 24,906,085. When I'm looking on the printout of the report itself, I'm seeing 24,371,291. Not clear to me where the difference is coming from.
So the property tax includes the first line that says property tax, and in the statement it says 24.3 million, and there is in the other line item where it says interest income / other, there is a supplemental line item that is included in there. It's around another 100,000 or so. So it's a combination.
So just so I'm clear, the number that says interest income / other, which totals 893,000 on the report, there's a portion of that which you've included in the property tax when you report the 24,906.
So it's the 24.3 and some of the interest income other, that's 893,000.
Okay, I mean, as I say, it's not a it doesn't impact the message because I see even at 24.3, we're at over 98% of budget. And if we add in those other revenues so that we're 24.9, we're actually above our budgeted number. So it's not going to have a big picture impact. But I have a similar question on the sales tax side. In the written report, it says you have two numbers, the 12,173, 893, and the 11,814, 930, which is the number that's on the report. What accounts for the difference there?
Again, it's the same. So the sales tax alone is 11.8 million. Those are the tax receipts. But then there's other revenues posted to that fund 74807, and it's a combination under the interest income / other. So it could be interest income and other. So for example, when we get a grant and we're spending both for donations, we're spending under both the property tax and the sales tax, we will book that revenue under the two funds, and it's combined here under other. You normally, what we've agreed to in terms of these reports is that this is a report that you get on a monthly basis, and on a quarterly basis, you get the itemized accounts under each fund. And so the numbers that I have here are from those detailed schedules that you don't have here. But if I were to break it down, the total revenue is 37 million. And if I were to break down the other, I could, you do get the 11 million that you see here, plus some of the other will total 12 million.
Okay, thank you. And I appreciate the accuracy of the forecasting on the revenue side. I think you and your team are doing very, very well there. Just a couple of other questions to clarify. I know you included the statement of special fund activity, but no changes in that from the previous month, were there?
Correct. No change in there.
Okay. And with regard to the voucher payments over 50,000, I was glad to see that we have a new furniture refresh in Sebastopol. So
Yeah, it's not quite a refresh. I mean, we're not putting in new shelving and new
Right.
carpeting and stuff. We think it's new furniture. Similar to what we did at Central Ave.
okay, good. Do you have any pictures for us?
I'm sure he gets some, you know.
Maybe. Sorry, I missed it.
What would you like?
You know what, Ray, if it's in there, I'll go back and get it.
Okay.
No worries, thank you. Any other questions about the financial reports? Give us, Barbara.
Just a comment, so we won't have the year end until August, but commission's not meeting in August. Will we meet as a finance committee meeting in August?
I think that's a great question. I think we should take it up at the end of the meeting. Based on what Myrna said, given the fact that the team is going to be running 2 years simultaneously, I'm thinking we shouldn't meet in July. But it might make sense for us to meet in August prior to the commission meeting in September if we're all going to be available. let's take that up at the end of the meeting, if that's okay. All right. Thank you. Okay, next item is budget adjustment, gifts and donation fund, and we're on page 12 of the packet. Maren, I'm gonna let you set this up for us. This is, by the way, just a discussion item. This is something that will come before the full commission for approval in July. I think our function today is to review, understand, and hopefully be prepared to recommend approval to the full commission, but we won't be taking the vote. Okay, please go ahead. Thanks. Questions from the committee? Barbara?
Just curious, it's always good news to get more gifts than we thought. What kind of contributions and donations are those? Are these like inheritance thing, in wills? Are they property or what?
You
They're
have-
probably cash.
You have seen this gifts and donations. It is.
Maren, it certainly makes sense to me that if we've received more money than we've expected, we should authorize the library to spend more. Is it expected that we will in fact be able to spend all the funds within this fiscal year? And if not, does the approval get rolled over into next year?
So yes, we do expect, so for example, as you can see in actuals, that is 3/4 of books, 3/4 of the year worth $43,000 that we've applied to the current fiscal year. And so to cover, we do expect yet the, the last quarter, so we still need to, I don't know exactly how much it'll be. The report will be run at the end of the month. So we do have those costs. And then under special department expenses, we already are seeing. So we're doing our best so that the branch managers are in a more timely fashion, spending down the donations of the friends. So yes, we're already seeing them. This is all about a conversation and the activity that we're seeing in the accounting and the invoices that are coming in.
And I know that you reported out to us and to the full commission, the improved and more timely reporting that you're going to be doing to the Friends groups, which I appreciate. I just have a feeling that someone on the commission will ask about special department expense. Can you or Erica just give us a sense of what kinds of items would tend to fall under that category designation?
Yeah, so what has happened with Friends, for example, from what I've seen, is that branch managers say, we're going to have this special activity. So for example, at Roner Park Katati, the branch manager requested donations to help pay for the 20th anniversary. So we call that a special event, and without a line item that says special event, we book it under a special department expense, and all the little knickknacks that come with it. You know, if we're gonna have some swag, or food, or, you know, all of these items that the friends will help pay for are booked here. And that way, when we run a report, we could say, you know, we could tell, and we could say that special department expense are those special types of events that we run.
Thank you very much. I feel comfortable with this request. Is there anybody on the committee who has any concerns about recommending to the full commission that we approve this measure? Okay, thank you very much. So let's move on to item 4.3, the appropriations limit. This is similar in that it will come before the full commission for approval in July. I think we've all seen this every year. It's pretty standard, but please take us through it so we can be up to speed on the specifics for this year.
This is really a voter approved initiative. It was a change to the state constitution, all with the intention of reporting back and to the voters on the level of taxation that each district or government entity, you know, collects. And so the library is responsible to meet an appropriations limit. And it's called the Proposition 4, or in other words, the GAN spending limit. So annually, it's the California Department of Finance that's required to send a letter to the library and all the other jurisdictions that need to meet this requirement, that provides two factors in calculating our appropriations limit. And those two factors are the change in population and a price factor that is for the cost of living. And in the packet, it had all that information, and I included the letter from the Department of Finance. So therefore we use those two factors and the calculation that's, you know, presented to us in the letter to calculate the library's appropriation limit. So the library's appropriation limit for fiscal year 23-24 is 52,554,990. And our net appropriation that is subject to this limit is $42,752,550. And those are primarily our property tax and our sales tax. Yes, 42.7 million. What did I say? Oh, okay, sorry. 42.7 million dollars, as you can see on the screen, 42,752,550. And so then you subtract the net appropriation subject to the limit from the adjusted appropriations limit, and the difference is $9.8 million. So the library in fiscal year 23-24 is under that limit.
That's,
really good.
yeah, it is. Questions, comments from anybody on the committee? Deborah?
Only that in earlier years, when we have discussed this, the county was involved, and I think the state has clarified some of that. I remember having a conversation about this about 5 years ago, because we neglected to file the resolution a couple of years in a row. And so the county was involved a little bit because their numbers were what we were looking at, but it's good that the state has gotten involved. So this is great. This makes me sleep better at night.
Other comments, questions? Barbara, Dave?
This was mostly like crossing your T's and dotting your I's, and yeah, we just basically, as a newish public entity, you know, kind of forgot to do it there. But you're on top of it, so great.
Yeah, it seems like it's important that we file every year, even if we're below, because that increases the amount that we would be able to spend if for some reason our revenue were to suddenly increase significantly. You didn't say this, and I could be misunderstanding it, but would I be right in thinking that expenditures that come from our fund balance are not subject to this?
It's not our expenditures, it's our receipts. So.
Oh, so we're only allowed to accept a certain amount of revenue?
Correct, yes.
Okay, so, okay, so it has nothing to do with what we spend, it's just the receipt of revenues.
Yes.
Okay, well, let's keep
Proceeds
let's
from taxes.
keep raising the amount that we could receive.
Well, but if it gets over a certain amount, then you have to go back to the voters for them to, so we want to go back to the voters to renew. That's right. That's right.
The entity will have to review and return funds,
Mhm.
you know, so
Okay.
yes, that's.
So what I think I'm hearing you say is that our expected receipts next year from property tax and sales tax are projected to be around 42.7 million. We're not bumping up against any issue unless that were to increase to over 52 million.
That is correct, and if for some reason, so it does include our budget, as you know, it does
Right.
include the use of fund balance. And if there were an emergency where we needed to exceed the 52.2 million and use our fund balance, there is a process to exceed that limit, but there's a process. We're not there. There is that process to follow.
Okay, thank you. Barbara, agree totally with what you're saying. It feels like we're dotting the i's and crossing the t's. I'm assuming that everybody's comfortable recommending approval to the full commission on this. Okay, great, thank you. So we're on.
We're a joint powers authority, and it's a.
Okay, so we're on to item 5. Do we have any requests about items to be added to the agenda of future meetings? Barbara.
One more of a question. I'm wondering when we're going to, when it's the right time to kind of do a second pass at the 5-year projections. And I know, as our director mentioned at the commission meeting, we're getting a study done on our facilities what we need to do. And so that'll have a lot to do with those figures on that 5-year report. But, we took the first look at it and, then we have to think about, again, back to our funding, our unfunded liabilities and all that stuff. I just wanted to kind of have a general sense of when it's time to look at that again, or.
Yeah, so at the next finance committee meeting, the plan is to provide a timeline for the next steps regarding the forecast. So what my understanding from the discussion in May where we reviewed the 5-year forecast and the 2 scenarios, one with sales tax renewed and the second scenario where sales tax is not renewed, is to go back and provide greater detail of how operations would be impacted by the loss of revenue. So that is going to be an iterative process and a collaborative process with our division managers on hours and and the number of employees, and programming. So we will be looking at a process to get their subject matter expertise to look at the impacts of losing the sales tax revenue. So that'll take some time, but we will embark on that in the next couple of weeks and have a timeline for you as to when we can then come back to the finance committee and get your feedback on what those greater detailed scenarios would look like.
And I'm just going to jump in and say, and then I'll yield to you again. Myrna and I talked about this the other day, and it was helpful for me to understand that, in fact, this is not just a financial exercise that the accounting department does. This is really a collaborative exercise that involves all of the division managers. So there's some time involved, but there's also some urgency to get it done. And so we talked about the fact that, and I certainly don't want to represent that I have any particular expertise in how we should be approaching the voters for the renewal of our measure. I'm going to assume that most of what we want to do is going to be selling everything that we've done and promoting everything else that we could do. But I think it's also important that we have a clear picture of what's the alternative. And so that's what Myrna will be spearheading. It will be a collaborative exercise, but it will be timely also. And so we had discussed, this is a general Q4 delivery date. I don't want to pin you down, but I recall something you were looking at October, maybe.
Yeah, well,
Or
so
November.
yes, I was thinking
Yeah.
that perhaps we can come back in October or in the fall with the further detail.
Yeah.
And I can add, so group 4, who did our facilities master plan, we actually have, when we did the contract with them, there's a line in that contract that they can do our CIP. So we are going to work with them on that. So we will have that by, I'm hoping that we will have that soon enough that we can include that as part of the discussions.
Barbara.
What were you exactly calling that? Group 4 is going to do
For the capital.
capital improvement. Okay. So when we looked at it the first time, my recollection is, besides the sales tax renewal, yes or no, besides that, and about 3 years out, the amount that we had available for other renovations dropped down significantly. And that's why, I'm appreciating this information to pull that together. So we know if we're going to have enough money to do equivalent refreshes to all the branches after we, so it's more than the sales tax, yes or no. That's
Right. There's work to be done on both both of the scenarios, the good news scenario, sales tax renewal, and we can continue to grow the library. And then there's the Death Star scenario.
Whatever that.
Yeah, Deborah?
I think we also then, when you all have looked at the material, we need to decide, or you need to decide whether it is appropriate to bring it to the finance committee or whether we should bring it to the commission, because a lot of these conversations are going to, because they are more than just the finance there. So if you want to bring it here first, that's great, but I
Oh,
think,
yeah,
but it's gonna be
definitely the plan is to go to the commission with the final.
right.
We can have further discussion when the timeline is presented to see how
Sounds good.
exactly this committee would like to proceed. It's always good to have your feedback first and do a little study session and make sure that we captured at least the perspective of the finance committee. But that's up to this committee to decide, also give us feedback as to when you think it should go to the commission.
Thank you. Other agenda items you'd like to see coming up? I will say that the timeline that Myrna and I discussed did include a number of other topics that are of interest to the committee, but let's wait until we see that to discuss it further. The next question is, when should we meet? That's item 6. I'm inclined to say, I'm sorry, go ahead.
Let me jump in.
Please.
I was looking at our year end, our year end calendar. And July 20th is the day that the system is closed. We cannot go in there and make any further changes. But then there are a few days that are built in where the county reviews. They do a review. And that takes approximately, I don't know, I think the rest of that week. And so the numbers are not final and available to us until like the end of July. So given some vacation schedules and given that my experience from last year in making sure that all of our financials were ready for the finance committee, I wanted to suggest the 28th of August if you were planning to meet.
Okay, so currently I'm looking, normally there's two parts to that, right? I think you're basically saying there's no reason for us to meet in July, and it would not be particularly convenient to try to do that while your team's dealing with 2 years of reports. And I don't see any opposition to that. In terms of August, our normal meeting would be the 21st. I think you're asking that we move it back a week to the 28th. Is that right? How does everybody feel? Any objection to that? Okay, now the regular commission meeting is the 6th of September. So that'll give us a week and a half to review and approve the minutes. And Lisa, do you anticipate any problems preparing for the commission meeting if we have this committee meet on the 28th of August?
Well, it's not a problem to prepare for them. It's just that whatever happens here, to incorporate it into the agenda for August 6th may be a bit of a challenge.
What's the packet deadline?
Says- Okay, so yes, it would be August 25th for the September 6th. So if this meeting happens on the 28th, it could be if there's a swift turnaround to get it in the packet.
What would be an urgent action item?
I mean, I think the posting is August 1. I'd have to pull up the official calendar.
September 1.
I'm sorry, September 1.
So normally we do legal review and then the chair and the vice chair review the material.
Right, but is there any reason why we couldn't? Either ship it the following month or?
Really just be the year end. And given everything that you've shared with us so far, I'm not anticipating that there will be any, I think we can all foresee what the year end is going to look like. So worst case scenario, we'll just have to include it the following month for the commission. I'm okay with that. Let's,
But assume that it'll be okay,
right.
Yeah.
Barbara?
Well, just was there a reason that the 21st would not work of August? It's a month later. Vacations.
All right, so let's agree to meet on August 28th at 3:00. No meeting in July. I hope everything goes well with closing the books, and thanks to you and your team. I'm going to adjourn. It's 3:52. Thanks, everybody.
Wow.